what are some of the reassuring signs that someone is doing financially well? And I'm thinking really about the average person.
We have this misconception that your goal is to get good grades in high school, go to uni, and then get a good paying job. And then as soon as you can, take a loan, buy your house, go and live there, and then buy a car. And then if you have money later on, buy a plot of land. That's the culture, right? For me, the signs that someone is doing financially well is that they flip this upside down completely. When I see someone taking money out of their salary every month at the start of the month to save, what I tell people is, during the course of my studies, I encountered this concept called binary economics. In binary economics, there are two ways of generating wealth in the world for everyone. One is you sell your time, you go to work, you get money, right? And the second one is you own capital, a property, owning stocks, owning different kinds of assets, right, that appreciate over time. And I quickly realized that Mauritius and the African continent are stuck with only one of those ways, which is selling their time. People need to realize is that their money depreciates over time. So every year that goes by, there's this thing called inflation, and not a lot of people realize its importance, because if you're building wealth and you're building your savings and every year it depreciates, why are you building it? Just spend it as fast as you can, right? But that's not the solution, obviously. That's where...
Hi Ishant, welcome to Figuring It Out. I'm excited to have this chat, but also we're going to treat it a bit like a masterclass to talk about finance and investing, especially for the Mauritian public today. Can we start with an introduction about yourself?
All right. Well, like you said, my name is Ishant Ayadassen. Let's go back to where I was in high school. I went to the Royal College of Gilpip. And after that, I took a gap year, went to the US. Spent 5 years in the US. I kind of went there undecided, not really knowing what I wanted to do with my life, honestly. But the gap year I took after high school helped me kind of figure out that what I like to do is creating change and hopefully inspiring people around me, driving positive change. But how do you put a job title to that, right? So when I went to the US, I started studying business, but then I quickly realized, look, this is a lot of logic stuff. I need to find something that is more applied.
Practical.
Yeah, practical. And then during the course of my studies, I went back to Mauritius. I came back to Mauritius for a holiday. I think it was in 2018 or 17. And I think it was 2017, yeah. And when I came back, there was this conference by the Stock Exchange of Mauritius, right?
Okay.
And they told young kids between 20 to 25 to come to that conference, come learn about the stock market. I was like, okay, let's go. At that point, I didn't know anything about the stock market. And I was probably 2017, I was 20 at the time, 2021. So I came back to Mauritius, went to that conference, and in the conference they said, okay, if you invested 500 rupees every month since you were 20 up to the point that you're 60, you'd be a millionaire. So I was sold. I was sold on the idea. I was like, wow, this is amazing. All I have to do is just put some money aside and it will grow.
We're going to get into how much is some money.
Exactly. So after the conference, I was sold. So I picked up the phone and called the guy who was animating the conference. He's a stockbroker. And I said, hey, man, all right, I'm a 20-year-old. Like you said, I want to open an account and I want to start investing. So he told me, all right, so you're going to need a minimum of 10,000 rupees to open the account. You're going to need 5,000 rupees a year to maintain the account. Plus, you're going to pay at least 2,000 rupees on every trade. I was like, bro, I only have 2,000 rupees to invest. I'm a kid. I don't have a job, right? So that was when I realized really that investing is something that people need to do, but it's not necessarily easy at this point in time in Mauritius, especially. So I go back to the US after that conference to continue my studies, and there I find this app called Robinhood. Okay. And Robinhood is this trading app that has basically revolutionized the way people trade, right? You're trading, you don't have barely any fees, right? And it's an app, it's super user-friendly. Everything that used to be super hard now seems easy, right? And when I discovered this app, I realized, hey, look, this is gold. And I wish we had something like that in the African continent, in Mauritius, right? That could help people to invest. Because when I went to Mauritius, obviously, I couldn't, right? So yeah, that kind of changed my path when I went to the US. When I came to Mauritius, I realized that. I went back and saw Robinhood. I was like, okay, I need to bring this to Mauritius, but can this be done in Mauritius?
Right.
So I come back to Mauritius in 2019 and I then start scouting the market, right? I joined the Mauritius Africa Fintech Hub and I meet a lot of people. It was very, very helpful. And I quickly realized, look, this is something that's feasible in Mauritius, but it's going to be very, very tough. I don't even have the skills needed to be a CEO of such a company. So step one would be go back and acquire those skills, right? And step two would be, I already evaluated the market. Let's let the market have more time to be more ready for this product, because it was still very, very early, even in the US at that point in time. So I go back to the US and I switch my course. I now start doing economics, right? And during the course of my studies, I encountered this concept called binary economics, okay? And binary economics, what it says is basically that there are two ways of generating wealth in the world for everyone, right? One is you sell your time. You sell your time, you go to work, you get money, right? And the second one is you own capital, right? Owning capital means owning a property, owning stocks, owning different kinds of assets, right? That appreciate over time. And I quickly realized that out of these two ways of generating wealth, the merchant country, basically Mauritius and the African continent, are stuck with only one of those ways of generating wealth, which is selling their time. And the problem with selling your time is that it's limited. Yeah. You only have 24 hours a day. You need to sleep, you need to eat, you need to do all your stuff, right? Plus you then work. So there's only so much you can do. So then I realized, look, if we want to help the African continent and if we want to help Mauritius, this idea that I have of creating this trading app in Mauritius would kind of be a solution, right? It would work, right? Because it's a first step. It's not allowing you to earn every asset out there, but it would basically democratize the access to the ownership of capital in the African continent and in Mauritius to start with. So basically that concept of binary economics reinforced my desire to come to Mauritius and launch this app. So yeah, I finished my studies in the US, become a financial advisor there, and quickly I acquired the skills that I was lacking for.
Which were? Which
were basically understanding how the financial ecosystem work. How can I basically to set up ZUNKO, and we will talk about ZUNKO quickly. Yeah. But basically to set up a trading app and to basically revolutionize how everything is being done, I need the skills that the guys at the banks and the brokers already have, but they're not necessarily innovating on, right? So for me, I have to acquire these skills, plus I need to see how can I innovate on this, right? Because coming in here as at the time, I think I was 23 by then, coming to Mauritius as a 23-year-old, trying to set up something like that, the people at the banks were looking at me and like, why does he think he can change everything? Does he even have the skills? And at the time, I didn't really. All right. So basically, you're having the skills to understand, look, what are the rules? What are the regulations? What do I need to respect? What can be redesigned, essentially, and modified to make it so that we provide a better service to the people on the island? And how we can make it essentially possible for them to even start investing. Because if you think about it that way, you remember the guy that told me I need to pay 2,000 rupees per trade? Forget all the other fees, right? So if I'm investing 10,000 rupees and I need to pay 2,000 to buy and 2,000 to sell,
what's the point?
What's the point, right? 40% of my investment is gone just for buying and selling. So the real solution for Mauritius, if I wanted binary economics to be some concept that I'm able to push in the African continent, I had to find a way to make it so that people with only 10,000, 1,000, 5,000 rupees, even 500 rupees can invest and it still makes sense, right? And to do that, it's tough. It's not easy.
Right.
It requires a lot of money, a lot of effort, a lot of financial engineering. But now I can say that finally, after how many years? 2019, I came to Scout. It's now 2024. 5 years later, the app still hasn't launched. But the live version of the app will launch to about 25 people. 25 people that we have carefully selected because these will be the first early testers. And these are people that understand that the app is not yet where I necessarily want it to be. In September and October is when we will do, probably around the end of October is when we will do the big launch of the real app where retail investors and basically the citoyen lambda, like we say, would be able to invest, right? The average Joe will be able to invest and instantly, because right now there would still be some fees and some delay in trading, but at least we're getting to market now, finally.
Which is an exciting timing.
So this was a long excerpt to who am I, right?
Well, your identity, I guess, ZUNKO is very much part of your identity, right?
You know, everything I've done in my life so far has been leading up to this, right? Has been leading up to ZUNKO. Everything I've done, I had something else in mind, was ZUNKO, right? To get to this point today, basically, I've tried raising funds for ZUNKO, and it is a very risky business, right? You need a license from the regulators, you need the tech, you need the support of banks, you need a lot of things that are very tough to
it's risky, but there is an actual gap.
There is an actual gap
in the market.
Yeah. But what investors had a hard time essentially accepting was the fact that we didn't have the license yet, and we had the app, we had the people that were willing to get on the app, but will they make money in Mauritius, right? And investors is gonna invest in a company only if it makes sense for them. It's not a philanthropic venture for investors, right? It's not something that they would just put money in and not expect a return from, right? And at that point in time when I was trying to raise, it was very, very tough because that case for them where they make money is too far and too risky, basically, right?
How much capital have you seeded so far?
Well, that's the thing. So I've done everything else that I had to do and that I could do to be able to fund it myself. So we haven't raised capital so far at all. So this has been fully bootstrapped. And I'm very happy, actually. At the end of the day, it was tough. But when I look at it and I realize, hey, I will be able very shortly to launch ZUNKO without having raised funds.
Wow, okay.
It's an achievement. That's quite an achievement, yeah.
Do you have any other partners or is it just 100% you?
Over time, as the business kind of grew and we started developing the app, starting doing the marketing, etc. I worked with a lot of people, right? Some people fell off the bandwagon, some other people joined, right? But now what I can say is I have essentially people that are the key brains behind the non-financial part of ZUNKO, right? The tech, the marketing, and the operations, let's say, right? And these people, I've made them partners because, how can I push the binary economics concept, but then not share the capital? Yeah, you know what I mean? The equity. So for me, ZUNKO, it's not just about showing and saying, hey, we're solving this problem, binary economics, etc. We have to live and breathe it, right? So a very important portion of binary economics is ESOPs, employee stock ownership plans, right?
Yep.
So it made sense for me to reward the key employees, the key partners with equity in the company.
Makes sense. I would love for this chat to be almost divided into parts. One, the business side of things, so that you can impart your learnings and your lessons. And then two, sort of treat it like a class for dummy. What will be the things like Mauritians need to be aware of? Where do you even start when you think about investing? So maybe let's go back to the entrepreneur and the business side of things. So you were 23 when you came back to Mauritius and you started, or even younger, even when you started thinking about ZUNKO?
Yeah.
First of all, why the name?
ZUNKO. So basically, at the time, it was not ZUNKO.
What
a lot of people know it as Africa Invest, AFREECA, right? And it was Africa Invest at the time because the vision was to create an app that would allow free trading, like Robinhood. But I quickly realized that creating an app that will allow them to trade at a very discounted rates and make it worth it for retail investors is already a huge mountain.
Okay.
A huge task, right? Now, to make it commission free, it would have been impossible, right? So initially the idea started like that, but it had to quickly change into, okay, we'll have to charge some fees. But the fees are going to be so low that it doesn't weigh in the balance for them, right? That they don't feel it. So that's when I essentially changed the name. It went from Africa Invest, and at the time it was just Africa meaning making Africa free, right?
Right.
Yeah, but then we changed to ZUNKO. Why? Because, there is this story.
I was about to ask, does it mean anything?
Yeah, there is this story. So ZUNKO was a guy who lived in a village in Western Africa, right? And he was a very curious chap, right? It was back in the day.
Wait, is this a real person?
I'll tell you in the end.
Okay.
Okay. So basically, so ZUNKO was this guy that lived in a village in Western Africa. And he was very, very curious. So over time, as he grew, he started investing in local businesses in his locality. But then he quickly realized, hey, I'm limited. I can only do what's within my locality, right? So let me look at international financial markets, right? So then he started his journey to learning about trading stocks and all that stuff. But at the time, it was very, very tough. He had to walk several miles to go to his broker, where he would then exchange pink sheets, etc. So it was very, very tough, but he persevered, right? And over time, ZUNKO, through his investing, grew so much that he built an empire. And he was able to help a lot of people around him. And basically that journey is what embodies ZUNKO. And that's why we decided to call it ZUNKO.
And?
It's not a true story.
So please tell me, let me know. Okay, it's not a true story.
So it's not a true story. But, for us, we had to find something that's unique, something that can attract people, that sticks, something that's not ordinary, right? And the team opted for ZUNKO, and we also had our audience choose. So we have a decent following on social media already, and when we were going through the rebranding, we made sure we had several options, and we had our audience choose, and a lot of them went for ZUNKO.
When you think about the time when you thought about the app, if we think about the more relatable apps that have made it, right? Francesca's, Airbnb, Duolingo, different apps that have really made it. There was a gap, and somehow an entrepreneur came about and created an app. If I were to think about creating an app, I may have the idea, I wouldn't have the tech expertise. It sounds easy going out to the market and finding the one person who would be able to provide you with the tech, right? It's a lot of trial and error, and there's a lot of risking there. But I suppose over time, you've acquired the tech expertise as well. Let's go back to the journey, really thinking about someone who would like to test something, launch something into the market, test an idea. Where did you start?
Just to put it into perspective, remember I told you that when I went to the US, I was kind of undecided. I just knew, look, if I need to put a job title for this thing that is driving change and inspiring people, it's being a businessman, right? Businessman in what? To do what, right? So that was my question for the most part. And then I discovered Robinhood, and I was like, okay, I have this love for finance that I didn't know. I was a design and technology student in uni, in high school, right? So I completely changed my path and discovered this love for finance. When I discovered this love for finance, I realized, okay, if I want to launch this app, I need to go full on finance economics, right? So when I finished university, I was thankfully sponsored by a company to go and acquire my license as a stockbroker and financial advisor in the US.
Okay.
So that's how I kind of acquired more and more of that knowledge that I would need to handle the financial part of the app, right? Because it's a tech company, but it's a financial tech company in a sense, right? It's a tech company in the financial sector. Fintech, right? So that was the finance part. But then I still need to build an app. How do I build an app? I have no idea how to code. I don't know how to code. I have no idea how it even works. So I was like, okay, I have to take it in strides. Let's try to start finding people, right? And at the time, I was lucky enough to find a friend in the US that used to go to the same high school as me, right? He was 1 year younger than me. And I brought him on as a co-founder at the time. And he didn't necessarily code, but he had a lot more technical knowledge than myself, right? And with his help, we were able to hire, essentially, other people that we would need. So we had to go through hiring 1 or 2 people first. That didn't necessarily work. We tried again. We hired other people. Thankfully, and I'm going to get to this part of the story, but in the past 3 years, I've probably worked with over 70 people. And now I'm only left with 10. And these are 10 of the best, right? But I had to go through these 70 people, right?
Was it a false firing?
At some point, and I'm not necessarily proud of this mindset, but my biggest problem for the longest time was finding the right people that can help me bring the vision to reality. And I realized that finding the right people is not easy, right? So early on, I had to adopt. I had a mentor at the time that told me he had a great team, and I asked him, how did you build this team? And he told me, you need to do one thing. Hire first, fire faster. I wouldn't say that this mentality is something that you need to keep, but it got me where I needed to be, right? It got me to where I needed to get now, right? It got me the people that I have today that I can really say, look, these guys are the best, right?
Mm-hmm.
I could not hope for better people by my side because, you know, one entrepreneur can be great, but alone you can't do anything, right? So thankfully, let's go back to that story with that my friend in the US that joined early on. He helped me hire a few people, and as we started working together, he was more of the product kind of guy. I started learning.
Right.
I started learning what is an API, how does this work, what is a server, what is a database, how do they all tie together, how do you do this, the cybersecurity, like everything, right? Slowly. But it was not, I didn't have a book. I was just sitting in meetings, listening to them speak and try to butt in with logic.
Just a sponge.
Yeah, just soaking in as much as I can and essentially butting in when I can, right? And it's trying to contribute because they might be talking about something that I'm not conversant with, but the essence of what we're trying to solve is finance, right? So there's a lot of times where I had to understand what they're talking about and be able to interject as and when needed, right? So over time, yeah, still soak that in, right? And then that guy, my friend from the US, unfortunately, he left the project. But before he left, he helped me find good people, some good people that are still here with me. But over time, like you said, I had to acquire this skill because as a CEO, if you don't know what's going on and you just delegate, there's some things that will fall through the cracks. You will never know if things are going the right way, and you just can't help, which is not good, right? But so basically, just with ZUNKO alone, it was not enough to acquire that knowledge that I needed in terms of tech. And to fund ZUNKO as well, I needed money, right? So back in 2021, when I was in the US and I quit my job in the US as a financial advisor, I launched two businesses. I launched Africa Invest in 2021, and I launched Trades at the time. And Africa Invest, which is now ZUNKO, was a long shot. Like, it's not going to generate any money now. It's not going to help me survive, right? I don't have a full-time job. So I needed a business that would generate funds immediately. So I've always done this, right? I've always had a second business that generates money and helps me basically take anything I make here and dump it there, right? There's this concept in investing that is very important, diversification, right? I can say that I don't follow my own advice a lot of times, right? I've been so, everything I have to this day is in ZUNKO. I'm all in, right, basically.
Okay.
Yeah.
One of the burning questions that I probably have will be going back to the funding process. So you didn't raise capital. It's all you.
I tried. I tried to raise capital, but in Mauritius, we had people who wanted to get in. But it was for deals that just didn't work for me.
Okay.
Right? Deals that just didn't work for me. I'd rather not take these deals than take it and then what? Wake up every day and not feel motivated to continue driving this project forward, right? And these deals would kind of shoot us in the leg because we'd move from being a startup to being part of a bigger and larger entity. And we'd end up with the same bureaucracy, the same things that prevent. What makes a startup great is its ability to adapt, change, and be nimble, right? As a big corporation, you can't be, right? And now if a big corporation comes to me and says, okay, I'll take a majority of your project, you run it, you make it work, but we own a majority, it's not a startup really anymore.
I hear you. How do you, and I guess I really want to get to maybe the details here, but I get the people listening to us will be somehow like in the age bracket of 20, 30, 40. We are talking to maybe a Mauritian audience where there's one cost of living crisis, inflation, wages haven't really gone up in line with inflation. Yes, the minimum wage has finally gone up. What is it now? 20,000 Mauritian rupees?
But it's probably going to create even more inflation.
Exactly. So if I were to think about launching a business, and maybe, I don't know, maybe this might be a very direct question. How did you raise enough funds on your own to be able to scale ZUNKO?
It depends.
You did have a second business, you said.
Exactly.
Right.
Exactly. It depends on the kind of business that you wanna run, right? There are some businesses like ZUNKO. It's an app. It will burn through a lot of cash before it starts generating. But when it starts generating, it will be huge, right? Let's think about it this way. There's two types of businesses. One that you will bootstrap and one that you will blitzscale. Businesses like Uber, YouTube, Snapchat, Facebook, all those big businesses, what they've done at the early stages of their company is blitzscaling. And blitzscaling means we don't look at the bottom line. We don't look at if we're making a profit or not. We raise as much money as we can and go full on, bow, just trying to look only at the top line. Revenue, and user base, basically. In software, your key metric is your user base and your active user base, right? So a lot of these apps, what they've done is dump a lot of money, don't care about the bottom line, only care about the user base and sometimes the top line. Dump it money, scale, gain as much market share. But there are other businesses that the intention is not necessarily to raise funds or anything. You can start the business and you can start generating money right away. And you use that money smartly to keep growing the business and growing the business, right? And reinvest. The idea for ZUNKO is that it needs to move to a point of blitzscaling. But if I start the blitzscaling before we even launch and before we even create a proper valuation for ourselves, I kill the business before it even has time. And I couldn't even bootstrap ZUNKO. So basically it was just taking in money, right? This whole time. So ZUNKO was different. ZUNKO was a very different business because technically, to launch ZUNKO, you would have to start with raising money. Unless you have another source of income that's allowing you to fund this until you get it to the point that it makes sense to blitzscale.
Okay.
Right? But in general, there are two types, bootstrapping and blitzscaling.
Okay.
So to answer your question, it depends on the business. If you want to bootstrap, let's use an example. You want to have a clothing brand, let's say. Okay? All you would need is the initial capital. A small initial capital, buy your first products, do your first designs, etc. Sell it, start making a profit, reinvest, keep going. Now, if you want to turn that clothing brand into something like Lululemon, you know about Lululemon, right? Has this cult following that is huge, really. Then you need to take that clothing brand and stop bootstrapping and you blitzscale, right? So at the end of the day, what are you trying to achieve, right? Because not everyone needs to have $1 billion company. Right? Not everyone needs to try to get to a point that you are a unicorn or you're this massive startup, right? What I've come to realize over time is it's very taxing. It's very, very taxing. It's very demanding. We were talking about this earlier. Your personal life suffers a lot, right? So if you want to have $1 billion company, you want to build a unicorn, you want to disrupt the industry, it's going to be very tough. You will have to make a lot of sacrifices. And you need to know that this is really what you want, right? And you don't have to do this to be successful, right? To be a successful entrepreneur, you could have a business that you bootstrap and that you grew it to a point that you have a certain amount of employees or you have just yourself running the business. A car washing company. Maybe you have only one location for that. And if it's helping you live a comfortable life and you're happy and you're having time to spend with your family, at the end of the day, it's whatever works for you, really, right? Not everyone needs to go in and say, okay, I want to be an entrepreneur. I want to be the next Elon Musk, right? Being the next Elon Musk is tough, very, very tough, right? So yeah, at the end of the day, it's what is your goal? What are you trying to achieve?
What was the pitching process like at the time when you tried to raise funds? And I'm sorry about banging on about raising funds, but I do know from having followed a bit of like ZUNKO's journey, you did try to, or at least I've seen you pitching or presenting to the likes of the Mauritians commercial banks, or I've seen you at least presenting the whole idea to them. And I know from former colleagues, they've heard about ZUNKO, they are on the waiting list. So what was the pitching process like with the different banks and financial institutions in Mauritius?
So, early on...
I can see you having a smirk on your face, and I do wonder why.
So early on in 2019, when I came, I was like, let me stay off their radar. Okay, let me stay off of everyone's radar for as long as possible. So that was when I was scouting, right? Because I didn't want to really to put a chip in their ear necessarily. And then in 2020, when did I come back to Mauritius? 2022, I think. Yeah, it was 2021 when I came back to Mauritius. At that point, it was like, okay, start of 2021, while I was still in the US, we made some progress, started developing the tech. We now have an early version that we can release to people. And if we want to release it, we need to start marketing. The moment we start marketing, if we're loud enough, they will hear us. So there's no more hiding. So at that point, we started marketing lightly, and we gained a lot of interest, more than what I expected, really. And that made it so that the other people at the banks, and they also heard about us, right? And at that point, I was like, okay, well, let's kind of change the approach. What if right now I'm at a standstill because I built the tech, but I don't have the license. I need either a partner broker or I need the support of a big bank. So basically, I need a partner broker or a bank, right, that I partner with, and they fund us. They help us make the project a reality, right? Or I acquire the license, but to acquire the license, I need funding, and it costs a lot. And I then move from being a tech company to being a financial institution.
Right.
I did not want ZUNKO to move from being a tech company to being a financial institution early on because it would slow us down. Right? For us, I want to stay as a tech company right now. So over time, I started getting calls. Hey, X person wants to talk to you at X bank, or X person is interested in what you guys are doing. You should talk to them. So I was like, okay, let's start the conversation, right? Because I'm at a standstill now. I need to move forward. And if I have to knock at their doors at the end of the day, if I can make this a reality, no matter with who, that's what's important, right? I need to make this a reality. People at the end, the users need to be able to get this product and start trading, right? That was what's important. So at some point, it didn't really matter. It was like, okay, let's just go and talk, right? And part of me was like, why hide, right? What if they can actually help? What if they want to help? But I was naive. Over time, I started meeting people at different banks and different brokers. And I won't name anyone, but recently I met some of them again. And I asked them, look, we had this conversation. You guys were super interested. You guys got me into your office and we talked to the CEO and this number one and number two of the bank. But how come you never got back to me? And they were like, 2 years, that's 1 year later, right? And they're like, well, you're our competitor. You're competing with us. So we just had to hear what you had to say and that's it. So that was one. Right? That was a bank. And then there was another broker who was like, okay, you're trying to raise $500,000 at X valuation? Great. I'll give you $500,000 as a convertible note. You don't even need to give me equity right now. Once you get your valuation after you launch, we'll then establish what equity that is. But then these guys as well, they kept me going for 6 months. And they tried to make me sign things that would prevent me from talking to other people. Thankfully, I didn't sign the paper. But we were in talks for so long, and it always seemed like we were one step away, right? Always seemed like we were one step away from getting it done. But 6 months later, I realized, hey, they've been toying with us this whole time. All they wanted to do was they know we're almost out of cash. So let's make them burn their remaining cash. Because if we do that, they don't get into the market and they don't start competing with us.
Because I was about to ask, surely at some point, either one of these institutions would have attempted to create or launch a trading app, right? It's one of the most obvious things you would think of, given we do have a buzzing finance hub for an African continent. Someone must have tried.
I think there's one bank that did. They released an app, and I know MCB is also working on it right now. Other than that, I think only these two banks, really. There's another big financial institution that offered to buy us out. But that I obviously turned down the offer. It's too early, way too early. But basically, how to say this diplomatically, right? They've been trying.
We're not having this podcast for diplomacy.
They've been trying, and I commend the efforts, right? I commend, especially that one bank that released it. I'll say it's SBM that released their app, but it hasn't picked up. It hasn't picked up because the thing that they haven't realized and that people don't realize in Mauritius to this day is when they're building apps, a lot of them make graphic designers design their apps. An app is not a banner, okay? The UX, UI, the user interface and the user experience are key elements of the app. You might have a great product, but if your UX and your UI is bad, it won't take off.
It needs to be user-friendly.
It needs to be user-friendly, right? And you might have a terrible product, but if you have a great UX, UI, a great app, it might still pick up, right? So this is the same for marketing, right? It's like you might have, if you're amazing at marketing and your product's not good, you can still pick up. But if you're not good at marketing and your product is well, no, it's not actually the same. UX UI is, for marketing and product, it kind of works. If you're great at marketing, your product is not that good, you can still make it. If your product is amazing and you have zero marketing, you can still make it, like Tesla, for example. They did zero marketing, these guys, and they're huge, right? But for UX UI, there's no going around it. Like, your product might be amazing. If your UX UI is not good, it's not gonna cut it, right? So a lot of apps have released in Mauritius and have never picked up. One of the reasons, in my opinion, is bad UX UI. Second, lack of proper marketing. In Mauritius, those big conglomerates are still kind of stuck in terms of how and where they spend their marketing dollars, right? They're still using more traditional and old school routes that don't necessarily work as much today. What I can say, we've reached with, you told me yourself, right? A lot of people that you know heard about ZUNKO, right? That is because with a small marketing budget of about $1,000 or $2,000 back in 2022, we had reached about 600,000 Mauritians on social media, right? And that was with a tiny budget. That doesn't mean that all those 600,000 people remember us. Maybe they just skipped the ad, they didn't see it or whatever, but we reached them, right? So the way people do marketing in Mauritius needs to change, right? Especially if you're running a software, especially if you're running an app.
This might be a good segue to get into the investing part for beginners, right? Think about maybe Mauritius as such, and think about maybe putting ZUNKO into perspective. You will have the baby boomers, where we'll have a lot of generational wealth, and then the younger generations, the millennials and Gen Z, either trying to save and invest, but you will have two different categories of potential investors. For the Gen Z and the millennials, thinking about investing, why do you think we should start looking away from just putting our money into a bank account and earning 0.5% of interest, where it might be safe as an investment, but there is a high opportunity cost because you're losing out on the potential return on other investments? Let's take the conversation one level down for people listening to us.
Okay. So I think the most important thing that people need to realize is that their money depreciates over time. So every year that goes by, there's this thing called inflation that, let's say if inflation is 5%, let me make it simple for you. Last year you had $100. You would go to the store and you'd buy $100 worth of items. This year you have $100. There was 5% inflation. You go to the store, and with your $100, you can only buy $95 worth of items that you would buy last year, essentially. So basically, your $100 is now worth only $95, right? And that is basically what inflation is. And inflation happens every year. You want it or not, it happens every year. And that's generally above 2 or 3%, right? So basically, your money depreciates every year, 2 or 3%. And as you keep it in the bank and you're getting 0.5% interest, or maybe even you're lucky, 1% interest, or if you put in a fixed deposit, 2%, right? You're still losing money. You're still losing money over time. So your savings are depreciating, right?
Right.
So that is why, and not a lot of people know this, and not a lot of people realize its importance, because if you're building wealth and you're building your savings and every year it depreciates, why are you building it? Just spend it as fast as you can, right? But that's not the solution, obviously. That's where investing comes into play, basically. Because what investing allows you to do is to grow your money. And if you can make your money grow more than the inflation rate, or at least match the inflation rate, you're not losing money every year, right?
Which is a good start.
This is a good start, exactly, right? But with investing, you can also generate a lot more, right, than the inflation. For example, if you invest in stocks, if you look at the average of the stock market for the past, I think, 50 or 100 years, it has, I don't know exactly, don't quote me on the time frame, but basically on average, the stock market in the US generates about 15% returns. So if you think about it that way, you have $1 million rupees today, you invest in stock, you invest in the stock market. Next year, you could have 1.15 million rupees, right? So with inflation, maybe if inflation was 3%, you made 15, you're in profit of 12, right? And basically just to make it, let's say investing for dummies, investing in stocks for dummies, right? So what is a stock? A stock is, let's say, a share of Apple, a share of Amazon, a share of Facebook, right? These companies, what they do is they break up the ownership of their company into several shares that they then sell to people. And then these shares go up and down. The value of these shares go up and down, right? So let's say tomorrow I buy $100 worth of Apple. If Apple releases the iPhone 15, let's say iPhone 16, and it's crazy AI features and stuff in there, the stock price goes up in value. It's now, let's say, 120. So if you held that stock while it went up in value, you made 20% return on it. Of course, you don't realize those gains until you sell the stock and you take the money back, right? So that's one way of making money through investing in the stock market. But there's also another aspect, dividends. Right? And what are dividends is basically a company's profit. Let's say every year, Apple sells their phones, they make a lot of profits. Sometimes companies decide to take a portion of that and distribute it with their shareholders. So everyone who owns shares in those companies, right? So let's take Apple as an example. If Apple was giving dividends, basically just by owning that stock, every year you'd be entitled to a share of their profits. And all you can do is just wait, hold these shares, and you basically own part of Apple, right? Something that could be interesting for more Mauritians is Manchester United is a tradable stock on the US stock exchange. So instead of being
that
just
was my brother's first investment.
Really? Yes.
And I was like, what for? I was like, I love Man United.
Exactly.
Didn't care about anything else, but that was his he was quite young then, but that was his very first investment.
Well, there's nothing wrong with that as well, you know? Like instead of leaving your money to sit in a bank, if you like Coca-Cola, you like drinking Coca-Cola, you buy Coca-Cola stock, right? It doesn't, you like Apple, buy Apple, right? It at the end of the day, it doesn't have to be, like, it's better than letting it sit in the bank, right?
I think the one disclosure would be, obviously, it's to your point, the price of the stock will be subject to different reactions or different developments onto the market. So you can also lose money.
Yep.
But I think there's also a less time intensive way of investing, which would be ETFs.
Yeah. Exactly.
So exchange traded funds, which means that if you do not have once the patience or the knowledge
to know what stocks to
know
pick,
exactly, to go for like a full stock screening, then you can actually invest in ETFs because that will be tracking the market, right? For people in Mauritius, if you were to start thinking about ETFs to start with, for ZUNKO, will they be able to do that?
Yeah. So basically, let's explain what an ETF is first, right? So what I explained is you can buy a stock, a share in a company, let's say Apple, Amazon, Facebook, right? But instead of, let's say tomorrow, like you were saying, you don't have the patience to go and find the stocks and know what stocks to buy. You don't want to read the news. You don't really care, honestly. You just want something that could be a good investment, right? So what you would do, and there's a concept in investing that is very important, is diversification. You wouldn't take all your money and put it in one stock because that would be putting all your eggs in one basket, right? Let's keep the basket analogy. Basically, what an ETF is they take a lot of stocks. It's a company. They go and they buy shares in a lot of stocks. They buy shares in Apple, they buy shares in Amazon, they buy shares in Facebook, etc. They put it all in one basket. And then they break up that basket in a bunch of different shares. And then they sell the shares of that basket to you, right? That's what an ETF is. So when you're buying into an ETF, you're buying into a collection of a lot of stocks, right? And there are different types of ETFs, right? So to answer your question about ZUNKO, will ETFs be available on ZUNKO? Of course, of course. It's something that is necessary, and it will be available on ZUNKO. Right.
One of the most interesting anecdote that till date, I always like to mention it when I'm talking to friends about ETFs. As a basic start to investing, really, is the Warren Buffett famous bet with a hedge fund. The bet being that the S&P tracker at that time, that was just before the financial crisis, would outperform a selection that the hedge fund had picked, a selection of funds that the hedge fund had picked. And as we know, right after the financial crisis, that trade was not doing well because the S&P tracker did drop. And then eventually over the course of like 10 years, it did outperform. So maybe a word of advice for people listening to us to go and read up about it if they're less sure about choosing and what to invest into.
Yeah. So like you said, Warren Buffett invested in the stock market, right? And the stock market means a collection of a lot of stocks, right? There are things that we call indexes. Indexes would be the S&P 500, NASDAQ, and the Dow in the US, right? The Dow Jones. So these three indexes track specific stocks, like the S&P 500 tracks 500 of what they call the best stocks in the US, right? The Dow Jones has a different kind of weightage for different kind of companies, and the NASDAQ is a bit more tech focused, right? So these three indexes, if tomorrow you want to basically mimic the whole stock market, you don't want to pick different stocks, you can invest in those indexes. And you can do that through ETFs like SPY, QQQ, Vanguard, Invesco, stuff like that. I know Vanguard also has an ETF that is the whole stock market. Every stock that exists in the US, basically, right? So if you don't want to pick and choose, you can go for these bigger ones. And generally what Warren Buffett was saying is that in some cases, if you extend it for long enough, those indexes, those big ETFs can outperform a selection of stocks, right? So my advice regarding this is, look, it all depends on you, right?
And your time frame.
Like when I studied to become a financial advisor, what they told us, our main goal when someone comes to us is, we ask, what is your risk appetite? What is your time horizon? And what is your purpose, right? These are the main questions. And of course, we look at how old are they? What are their educational background, etc. Right? We use all of this to establish kind of like, okay, what should that person do? What is a good financial decision for that person, right? Here's the same. Like, I cannot generalize an advice and say, okay, this is good, this is bad, because it will depend on you at the end of the day. For me, I don't necessarily invest in those big ETFs because I love picking stocks, right?
You have a risky appetite.
I have a risky appetite, exactly. I have a risky appetite. I'm a finance guy. I understand stocks. I understand how they work. I've been a financial advisor. My job at the time was to pick stocks for people, right? So for me, it's a different thing. But for the average Joe, for everyone who doesn't have that much financial knowledge, it's easier to come and buy an ETF, right? We talked about those big indexes, but there's also ETFs that are more focused, right? For example, there's someone called Kathy Wood that is very known, and her company is called ARK. ARK Invest, right? And they have an ETF called ARKK. Disclosure, this is not financial advice, right? But they have an ETF called ARKK, and this is an innovation ETF. And the innovation ETF tracks the companies, mostly tech companies, some healthcare, etc., but mostly tech companies that are innovating. So it's an ETF that focuses on stocks that Kathy Wood and her team at ARK Invest qualify as companies that are innovating in their space, right? And you can invest in that stock. Let's say tomorrow at some point there was Virgin Atlantic and a lot of Blue Origins for basically space stuff, right? SpaceX as well. So the space industry was picking up a lot. And at that point, you started seeing space ETFs, right? ETFs that would invest in space companies. So you don't need to know what companies are in the space industry, but you invest in that ETF if you think that that's an industry that will grow, right? So ETF can be the whole market,
or more niche.
Can be index, and can be industry specific, or can be even more niche, right?
Love that. And maybe for Mauritians based abroad who want to invest in the local market, how is that possible? Look,
the Mauritian stock market does not have enough volume, right? It barely moves. And when it moves, it doesn't, basically there lacks volume on the market. That's to put it simply, there lacks volume. There's not enough trading that happens. So prices don't move enough or not dynamic enough. And to buy and sell, it's often hard, right? But that's a problem that ZUNKO thinks we can solve eventually, right? Because what's causing the lack of volume? Not enough people investing in the local stock market, right? And why are not enough people investing in the local stock market? Because it's tough. You can't. It's difficult. It's going to cost you a lot, right? So with ZUNKO, hopefully, we've been in talks with the Stock Exchange of Mauritius, and hopefully we'll be able to add local stocks to the app eventually, right? I don't want to put a time frame on it yet. Sure. The priority is enabling US stocks at the start, because that is more what the users want. But eventually the local stock market as well is something we want to add on ZUNKO. Now, how can that help bridge that volume gap, right? Well, if we're bringing a lot of retail investors to the market and they're all starting to trade, we create that volume, right? And we start making those stocks move more dynamically. It's easier to find buyers. It's easier to find sellers because there's more people in the market, right? So all that to say that currently, right now, you can invest in the local stock market. You can. And if you have specific, for example, I know there's one big company, I think MTEL. MTEL did the IPO recently. So I know a lot of people were interested in that and looked for ways, called me up and said, hey, how can I get involved, etc. So I told them, look, for us right now, there is two ways. There is the regular way, the traditional way, and there's the ZUNKO way. The ZUNKO way, unfortunately, it's not available yet, but it will come eventually, and that will make it super easy for you. You just come on the app, you do your KYC, you get into the app, you create your account, you deposit money, and you start investing. It's as simple as that, right? On the app directly, you don't need to call or email anyone. You don't necessarily need to be in touch with a human being either, right? But the traditional way, and that's available right now, it's a little bit pricey, it's complex, it's old school, but it is available and you can go that route. So basically what you would do if you want to invest in local stocks, you would call up maybe your bank that you already have an account with and check if they offer that solution. Or you'd call up other banks like SBM, MCB, or those other guys. Or brokers like Swan, Axis, CMB. There's a bunch of other local brokers as well that you can contact and open a brokerage account with, right? Once you open your brokerage account, you deposit money with them. And then every time you want to place a trade, you can call them or email them to place your trade.
It's just a bit more manual.
A lot more manual. There's going to be a lot of limits, essentially. There's probably a minimum account opening balance that you need to have, etc. But I'll.
Until then.
Until you have ZUNKO, that's your best option.
Ishant, this was super, super informative. My very last question for you. And I've tried holding myself from interjecting because I would love this to be about your expertise, and as much as I'm into the world of finance, I'm like, no, we need to hear from you today. Throughout this whole journey, as an entrepreneur, as an investor, talking to people, potential investors, what are some of the signs, some of the reassuring signs that someone is doing financially well? And I'm thinking really about the average person living in a country where there is high level of inflation. It's not really easy to save. Even if we preach about, the 50, 30, 20% rule, it's not always that easy. What are some of the reassuring signs that someone is doing financially well?
Okay, individually. Okay, so this is a question. I've been invited by several universities to come and speak about these things. And what I always tell them is this: look, we have this misconception in Mauritius that when your goal is to get good grades in high school, go to uni, get good grades in uni, and then get a good paying job or get a decent paying job, right? With prospects to grow, obviously. And then as soon as you can, take a loan, buy your house, go and live there, and then buy a car, and then you're done. Right? That's the culture in Mauritius. Oh, actually, if you have money later on, buy a plot of land. Right? That's the culture in Mauritius, right? For me, the signs that someone is doing financially well is that they flip this upside down completely.
Okay.
Right? And this is just one aspect, right? Is when you go to uni, after you're done with uni and you get out of college, you get out of university, you get out of uni and you go to your job. When I see someone taking money out of their salary every month at the start of the month, not at the end. Because a lot of people do this. They say, hey, I try to spend as little as possible during the month, and then at the end of the month, whatever I have left, I will save. Knowing human nature, it's going to be very, very tough for you to have anything left at the end of the month. And right, it won't be recurring as well. They won't be disciplined in the way you do it, right? So what I tell people is, first of all, take money at the start of the month. So already assign a portion of your salary that you will put to the side and you will start investing.
Pay yourself first.
Pay yourself first, right? And for them to not misunderstand what pay yourself means, pay yourself means pay yourself by investing.
Saving that as well.
Saving that and investing that, okay? So if someone is doing that, that means they have already understood something well, right? Now, the problem is if I'm only able to save 5,000 rupees a month, it takes me a year of saving to reach 60K. right? And if I'm going to go to a broker, etc., right now, it's very, very tough to start investing still. So it's very tough right now. There's not much you can do, but at least you have saved something, right? So it goes, let's say this saving right now goes towards a reserve that you have. You save up until you reach one day when you reach enough money that you can start investing. That was without ZUNKO. With the ZUNKO way, hopefully what you can do is you take your 5,000 rupees at the start of the month, you put it in ZUNKO directly and you start investing, right? That would be what I call a financially healthy person, let's say, right? But right now you would have to save up enough and then go to a broker and then you start investing as well, right? You have that option. The second thing that shows me that someone is financially aware and healthy is that instead of going to buy their home with their first loan, they buy an investment property, right? So instead of taking a loan with the bank, buying a house that you're going to go and sit there and live there and then work your ass off essentially every day to pay that loan, you're stuck. How do you make progress, right? So what I always tell people is your first purchase, your first asset should not be something that will not generate. It has to be something that generates for you. Because then you speed up the wealth creation for yourself, right? Because if you wait until one day when you have enough money to pay your house loan, plus some money left to make investments, dude, it's going to be what, 10 years down the line? It's going to be very tough.
And with the current interest rates.
Exactly, with the current interest rates, it's going to be very, very tough. So what I say is people, if you're going to take a loan to buy a property, buy something that you will, let's say, rent out and generate income from, right? Be it short-term or long-term, you decide. Generally, short-term is better if you're doing coastal properties. This is a huge business in Mauritius. And I think a lot of people should get into it, more people. Because if each Mauritian owned one asset on the beach, we'd all be doing financially, we'd be doing well, right? So basically, these are the two aspects. So first, you save at the start of the month. Second, once you're going to make your first purchase in terms of your first asset, make it something that's going to generate money for you, not something that's not going to generate money, obviously. And third, obviously, whenever you're saving at the start of every month, over time, if you save enough, start investing in stocks. But as soon as ZUNKO is out, you don't need to save much. You can, as soon as you have it, you put it in the app and you start investing, right? But one thing is important as well is that, and again, I told you, sometimes I don't follow my own advice. I told you I'm all in. I have zero reserves. This is not something that people should do, right? You should have reserves because you don't know what can happen tomorrow, right? You might have a health issue or someone that you love might have a health issue and you need to step in. So there are unexpected things that happen in life and you need to budget for that. So having some reserves is important. And if your investments are liquid, meaning you can buy and sell them quickly, your reserves could be in your investments, right? But it's still important. It depends on you at the end of the day. But if you want to keep some of it separate and not even invest it, that's okay as well. But for the most part, you have whatever you save should be invested.
Well, Ishant, on this super informative note, thank you so much for coming on today.
Pleasure.
This has been a very lengthy chat, but very detailed and very, very informative. And we've been aiming to record this podcast since the past 6 months. But thank you so much for coming on. I really enjoyed chatting to you today.
Pleasure. Thank you for having me.
Hey everyone, I really hope you've been enjoying this podcast chat so far. And if you are, please consider subscribing. 90% who watch my videos are not subscribed. So if you are in the 10%, thank you. And the rest, I really hope you can subscribe. You have no idea how it truly helps me. And I hope to see you in the next videos as well.